Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we're doing another head-to-head. And this time we're taking a look at ZIM and MATX, two shipping companies who are going through a bit of a tough time. Looks like the shipping industry has some problems going on right now, and ZIM recently cut their dividend. MATX I actually put on the buy list when I last looked at them, but looking into these numbers now, I think that it might be time to take it off that list. And it is up. It's actually the biggest gainer on that buy list. So I think we've gotten what we needed out of it. It was almost a 20% gain. But we're going to look and pin the two against each other, see at the moment which one would be a better buy. So we'll start with the financials, and we see that ZIM's revenue crossed over MATX's in 2021 and has been significantly higher since, while MATX is down and essentially flat. And the biggest reason for this is these are per share numbers. And if we go and we take a look at MATX, we see their share count going from 21 to 25 to 740 to 1,693. And at the rate that they've gone, we're looking at them breaking 2,000 this year. So they've grown their share count immensely. Compound annual growth rate for the 3-year is 332. For 2 years, 722. So they are issuing so many shares that they were doing better and diluted to the point where they're doing way worse. And that seems to be the story across the board. COGS doing way lower, so that is a good thing here. But ZIM is definitely much more consistent with their COGS. So ZIM did win on revenue. MATX did win on COGS. That's typically how it goes because you do want a lower cost of goods. Gross profit, again, ZIM hopped up and is staying higher, has a much better trend, actually an uptrend. MATX is just going down. Gross profit percentage, ZIM got up and is holding it, and MATX is just kind of holding theirs. Much slower growth, so ZIM wins on everything here. Expenses per share, ZIM is holding pretty consistent, and MATX just down. So MATX does win there. Expenses as a portion of revenue, they started out at the same place, but MATX is actually staying higher than ZIM. So we assume that they have lower margins at that point, and we're about to get down to that. So ZIM does win. Net profit, and this is the same story again and again. ZIM with much better growth. I mean, they are coming back down on a lot of numbers here, and that's why we see the stock down. But overall, definitely much better. Net profit percentage, ZIM up higher, definitely more consistent in MATX here, but ZIM does win across the board. EPS, MATX is winning here. ZIM's expected to come through with some negatives, while MATX is supposed to come through with $7 compared to the 27 from last year, a huge drop. And earnings yield, we see a lot of consistency across MATX, and ZIM is all over the place. So MATX is winning on the trend, but ZIM is winning on the value. And when we break everything down, we see that current value, ZIM is winning 3 out of 10, so would be considered better. And for growth, ZIM is winning 6 out of 10. So that one's a bit closer, but we got to give it to ZIM for growth and for current value. And then we have the rest of the information here. So like I said, share count, MATX has an insane number of shares. They have more than over 100 times more than ZIM does, and they continue to grow it a whole lot faster. So definitely do not like that. We saw how badly that dilutes the numbers. That's why we don't like to buy stocks who are issuing shares, because this is what's happening to the portion of the company that you own. We see it on every single graph. It's going to almost nothing because there's so many shares. Shareholders' equity, ZIM wins. Free cash flow, ZIM wins. Free cash flow yield, ZIM wins. For growth, MATX does win on shareholders' equity. Free cash flow, ZIM wins, and free cash flow yield, ZIM wins. So really, ZIM is winning across the board. Aside from debt to equity, they both do have under a 1 debt to equity. ROEs are very high for that debt to equity, so it does look like it's a high return business. The only other things that MATX is winning on is the trend for their book value. It's going up while ZIM's is going down, and the share price is going up faster, and the PE is staying more stable. But aside from that, honestly, ZIM is looking better than MATX as of today from what we're seeing here for both current value and growth factor. And I'm definitely going to have to move MATX off of the buy list because that dilution has gotten too insane. And this is why we check in on stocks. Yeah, it more than doubled, 129% last year. And that's what really did all of this. That's what makes it a hold rather than a buy. But honestly, I don't think I'd buy either of these companies. They would have been a good buy back in 2019, 2020, but as of today, things are not looking good. ZIM cut their dividend. They're going to have negative earnings. And MATX, analysts are revising their earnings estimates up. They went from the 4s to 7s, but they have issued so many shares that it's just not even worth it. So that's what we're seeing on this one. I want to thank you guys for watching. Please like if you enjoyed the video. Comment what other stocks we should pit against each other, and subscribe so you can stay up to date with everything. And I'll catch you next time.